What's going on? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world, options trading program. And what we're going to talk about is something that has been on my mind for a minute because I've been observing this in the news a lot. Because as a person that's involved in the market, a person that's involved in the options trading game, I read a lot of market-based news, a lot of market-based publications just to kind of stay on top of what's going on in the markets. And what we're getting a lot in this, there's a narrative that is being pushed in the media, and it's been being pushed, I probably want to say, over the past 3 to 4 months, that I think is very dangerous. And I think that the implications of this narrative, right, are going to be dangerous, especially based on the people that it's pointed towards. We want to go ahead and address this and do it really quickly, but make sure that we spend some time dealing with this particular issue. And what we're talking about is why the market establishment, primarily who are going to be what we will call baby boomers or boomers, right? And these are going to be the financial advisors, the analysts, the finance PhDs, this establishment, right? Why they hate primarily millennial traders and investors. And what we've seen over the past, I want to say 5 years, is that because of the advancements in technology, trading has become easier and easier for the average person. So let's say they started doing online trading around the early 2000s, right? Started getting a lot easier to do that. Well, a lot of people, and some of you that are going to be listening to this, you may be too young to remember it, but there was a time in which if you wanted to place a trade, you had to call your broker up to place a trade, right? And you had to justify the trade by essentially buying a certain amount of stock. You had to pay a commission to your broker. There was a lot of things that you had to do where there was a high barrier to entry that you had to go into just to place a trade. And as a result, it kept the average person out of the market. So to get the average person into the market, what the finance or the investment establishment created is something that we call a 401k. And what it did was it allowed you to passively invest via your job. And it was considered one of the, either that or what we would call maybe like a mutual fund. And so what these allowed you to do was to invest passively. But the problem was that, one, you didn't even a lot of times understand what you're investing in because you're not educated on the market. So they were able to get workers to give them their money without any real control and without any real understanding. And that is how they I would say, prefer the relationship to work. Now, because of technology, now because of access, now because of low commissions, what we're seeing now is that more and more people are becoming active investors. And they really don't like active investors. They really don't like active traders, right? And to me, a trader, to me, is an investor. Whether you hold something for 5 minutes, a year, 30 minutes, a day, right? You're investing in it, right? Because if you buy stock, you own equity. You're investing in it. You just choose to sell at a different timetable. Everybody's timetable is different. So this mentality that traders and investors, but especially young ones, millennials, who a lot of times are taking advantage, they're coming into this era where all they know is online trading. All they know is mobile-based trading. All they know is these applications to invest in companies. They don't know anything else. That they are doing something negative because they're not involved. The reason why they're so fearful of this is because they see that there's now a pathway for this establishment to be replaced. Because like I said before, it used to be where if you wanted to make a trade, you had to go through them. If you wanted information, it's something used to be called financial advisors. I personally don't believe in financial advisors. I don't believe you need one. I believe that you can educate yourself on what you want to invest in, right? I don't believe that you need a person that you're going to pay to consistently invest your money for you. Don't believe in that. Now, but if you believe in it, I'm cool with it. But I personally don't believe in it, right? I believe that's something that you should control. I don't believe that you shouldn't pay them to give you information or maybe to help you in a particular area, but for that to be like a full-time thing where they have stewardship over your account, and they continue to invest on behalf of you, I think is not a good use of your capital, right? So we're seeing is that the establishment of this particular space, they now have to figure out how to justify their existence. And so the only way they can figure out how to justify your existence is to tell this new group of people that are coming into the market that you're what's wrong with the market. You don't know what you're doing. And then when something goes wrong, what they're going to do is blame it on you. And that's what they're really setting up to do with millennial traders and millennial investors. And it's pretty much the boomer class that's doing that. And so let's go ahead and get into it, and let's kind of expand on this and then understand where we're going. So first, we want to talk about, there's a guy been on television a very long time named Jimcramer. And so he started, one of the first guys that kind of started with this narrative. And he didn't make up the narrative. The narrative came from the investing and the finance establishment. So what's interesting is that the establishment makes money off Robinhood because Robinhood sells their order flow, right, to these brokerages to execute the orders. So they make money off of it. But at the same time, they're worried about it because the young generation don't care about Jimcramer. They're on social. So he's a TV guy, right, who made his name doing stuff on TV. He's a TV entertainer. The platform he worked for is television based. Well, we all know TV's dead. So you have this old guard, right, that is trying to figure out how to make themselves relevant. And they can't really figure out how to make themselves relevant. So now what they're going to do is they're going to blame the younger generation, right? So Jimcramer is saying that Wall Street pros are playing a game with amateur Robinhood traders. If you read the argument, he's essentially saying is that the Wall Street pros are going to make the Robinhood traders into suckers because of some of the moves that they're going to make. But why is that different than when you work for somebody and you put all your money for 20 years into a 401k and then they sink the 401k and you can't retire because your 401k is negative? Why is that? What's the difference? It's the same thing. As a retail trader, you don't have any control over the market because you can't move the market. And all the retail traders on Robinhood can't move the market. We're going to talk about that later. Robinhood traders are getting blamed for something they don't even have the ability to do. So why is it worse for you to be investing as a trader on the front end using a mobile app than you to put all your money into a 401k for 25 years and then the market makers and the whales on the market, they sink the market because it benefits them to sink the market at that time. And your 401k goes negative and now you got to work another 10 years and you can't retire. That's supposed to be all right for you to be in that situation. But you trading on the front end and then having going bad on you because Wall Street pros are controlling the market, it's supposed to be worse than that. So you got to kind of understand is that these people, right, are part of an industry and an institution, right, that is designed to keep you disempowered, right, as a worker, as a young person, but even as a middle-aged person, right? They all are part of this particular institution. And so you're never supposed to get involved in this space. And as you see, as more and more people are moving into this space, you're getting more and more communication about how this is the worst thing in the world. Let's go to another article, right? So we talk about, they put these articles about how these guys, especially some of these younger people, got involved in Robinhood, even though he's 32, so he's essentially approaching middle age. How these people got involved in Robinhood. He say he lost about $860,000. Now, what this was a lack of psychological control. It had nothing to do with Robinhood. So what we got to understand is that his lack of psychological control existed before he ever started trading. So we can't blame Robinhood for his lack of psychological and his lack of impulse control. I guarantee you, and I don't know this guy, so I'm not trying to criticize him, but if we were to examine his life, we would find other areas in his life in which he lacks impulse control, right? We got another article that was very unfortunate about a 20-year-old young guy who committed suicide after he saw a $730,000 negative balance on his Robinhood account. Now, my question is that, do we think the negative Robinhood account was what made him commit suicide, or do we think that he already had psychological issues as a 20-year-old guy, and so this just contributed to that, right? Because I don't think that this was a healthy guy. Everything was going good in his life, and then he saw this negative balance in Robinhood, and he just decided immediately to commit suicide. But we see how we're crafting this narrative, right? That if you're a young person or you're a 30-year-old person, right? Or maybe even if you're a 40-year-old person, because it's not about age, it's about empowerment, right? It's about you breaking free, right, from this particular model that they've built where you give them all your money to manage. You go to them for their expertise, and then you pay them, and then when things go wrong, they don't have any solutions for you. So now that you've empowered to do it on your own, they now realizing that there's a path to them becoming obsolete. So now they have to create all these scare tactics to try to get you back right in position. That's what this is all about. Another article, right? So when the market does sell off, right, which is going to happen, the market is going to go up and down. When the market does sell off, what they now do is try to blame, right, the Robinhood traders. They try to blame, quote unquote, speculators. If you understand the definition of speculating, right, all investment is speculation. All of it. Why? Because you can't predict the future. So all investment is speculation because you're investing because you assume that you're going to get a gain. All investment, stocks, bonds, cryptocurrency, real estate. If you buy a car thinking that you can detail it and turn around and flip it at a later date for more money, it's all speculation based on the definition of speculation, right? So what we're doing now is soon as the market falls, which is outside of the control of the Robinhood people, because like I said before, is that retail can't move markets. Retail does not have the capital to move markets, right? So when the whales and the market makers decide that it benefits them now to push the market down, then what we do now is we run out and tell all the retail traders, hey, now don't you see now that the market is overvalued? Don't you understand now that you don't really belong in this space? All of this communication is designed to scare you out of the market, right? Because these people have taken an oath to maintain the status quo. They're part of the status quo. Part of the status quo is making sure that the average person doesn't understand anything about finance. That's part of it, right? And to use positional authority and prestige badges that we're the only people that you can go to, right, for analysis on finance, right? That's part of it. And so what we're seeing is that the market after COVID was propped up very heavily by the tech sector, the NASDAQ, right? The tech sector really propped the market up very heavily after COVID, right? And a lot of people are trying to create this narrative that it's the speculators, the retail speculators, right? And the Robinhood crowd, which is the reason for that. But in reality, it was a big hedge fund called SoftBank, right, in Japan. And what they did was they sunk billions of dollars into the tech sector. So if you're looking at this article, this is the Chicago Financial Times. It said over the past month, it snapped up over $4 billion, right? $4 billion of call options. I'm trying to highlight this. $4 billion of call options. And an option exposure with a notional value of around $30 billion, right? And they're telling you some of the funds. So $4 billion in tech stocks, Amazon, Microsoft, Tesla, and Google's parent Alphabet. So one of the reasons why the tech sector boomed so much after COVID is because this particular hedge fund sunk billions of dollars. But what we were being told is that tech was being propped up by Robinhood traders. 20-year-olds, 25-year-olds who were furloughed, right, and had gotten a $1,200 stimulus, they were boosting Tesla. That's what we were being told. They were boosting Tesla with a $1,200 stimulus, and Tesla's stock price was $1,300, $1,400. We were told that Robinhood guys with fractional shares, people buying fractional shares of stocks, were boosting the tech sector. When in reality, it was a big whale that was doing this. And you would think that financial professionals would be able to see the activity, be able to see the lot sizes being bought, be able to see the walls of stock, the sell walls and the buy walls, and they would know where these particular type of bids were coming from. And they weren't coming from Robinhood traders. Why? Because they don't have the capital. Retail can't move a whole index or indice. Retail can't do that. They maybe can move a ticker or a particular share with a very small float probably under $50 million, with a price point probably under $20. But retail can't move Tesla. They don't have the capital to do it, right? So you got to understand something is that there is an attack on the youth and there's attack on empowered investors, right? Because the institution guys are worried that they're getting ready to get replaced. Like I said before, is that Cramer's a TV guy. Well, we know that TV's dead, right? TV's essentially dead. And I mean traditional TV. I don't mean streaming. I mean TV. Traditional television is over with. So he's still attached to that format, right? So he has to try to figure out a way to make that format relevant, right? Because that format is what made him who he is, right? He's an entertainer. Where the real education that a lot of people are getting now was online. So if you go to YouTube and you type in stock trading, right? What you're seeing is that people that have started their own platforms, right, on YouTube, you still got guys like Valdez has been around a long time. He's been around since the early 2000s, right? But see, he don't hate on the youth, right? He encourages them, right? Still got guys like Adam Koo, a veteran guy, but he don't hate on the youth. He encourages them. But you're starting to see 40-year-olds, 30-year-olds going down to people in their early 20s, right? Still see Cramer, but you see NBC is not really dominating this feed, okay? And we all understand that because I'm not in incognito mode. A lot of what is in my feed is based on what I've looked at in the past. But just scrolling down my feed, you're seeing a variety of people, right? And you're not seeing the traditional outlets, right? You're not seeing the old guard. You understand what I'm trying to tell you? And that's what they're worried about. So when you got people like Trade and Travel, right? You got guys like Tito, How to Trade Options on Robinhood Step by Step, young guy. You know what I'm saying? You have people putting out their own platform, another young guy, Smart Trader, right? And you see these young people, you wouldn't see this 20 years ago. Why? Because there was no YouTube. And also, access to this type of information was being held by a lot of gatekeepers of the establishment. And because they want to maintain their position, right? Young sister made 802 days trading stocks on Robinhood and Thinkorswim. See, she's not supposed to be doing this. She's supposed to be working to make $800 a week. So the fact that she made $800 in 2 days, that's a threat to the establishment, and it's a threat to the oath that these institutionalized people have taken. So the reason why you're seeing baby boomers come against these young people, come against these millennials, come against the traders, right, is because they are a threat to the institution. And these people don't exist if you can't go to them and ask them about your 401k and your mutual fund. And we got a whole generation of people that understand, I'm not waiting on this group of people to show me how to get free from this system. We're going to create freedom from this system doing what we're going to do. Now, let me explain something to you. Are the majority of people, right, who are learning how to trade, are they going to become successful traders? Nobody knows. But being a successful trader is just like learning how to sell. When I mean learning how to sell, I don't mean selling on the internet. I mean, if you learn how to sell on the phone or you learn how to sell person to person and you're really good at it, you got a license to print money. You can essentially write your own ticket. If it takes you a decade to learn how to sell, it's going to be worth it because after it's done, you got a license to print money and you got a way to, you have a way to essentially write your own ticket. If you learn how to trade, right, you now can go create income on demand. Because why come there's all this trading activity going on in New York City, right? Going on in Chicago, going on in Philadelphia, right? Going on worldwide if trading is such this bad thing? How come they've been trading in these markets going on over 100 years? We can go all the way back to Denmark and Holland, right? And they've been trading for so long, but trading is the worst thing in the world. What you're supposed to do is just work and put money into a 401k and hope that you can get 6% a year. That's what you're supposed to do. You're not supposed to try to do anything to improve your situation. You're just supposed to buy a stock and hold it. These people don't desire to get you free of this system. But you're supposed to pay them, right, so they can teach you how to keep giving all your time and your life away to these institutions, right? While nothing improves for you and your family. So if you want to learn how to trade, I encourage you, I tell you to make sure that you're educated. Make sure that you manage the risk properly. Don't get caught up in the hype. Are there going to be some bad agents in this space that are not going to necessarily be honest with people? Yes, but we got people running real estate scams all the time and nobody's saying take down the real estate market, right? So that's just going to be a byproduct of this particular environment. You're going to always have bad agents, but it doesn't make trading bad. So wanted to shoot this video out because you're going to see, as time goes on, more and more media being created about how millennial traders, millennial investors, right, and even older traders and older investors are the worst thing that's ever happened in the world to the market. And a lot of this is being put out by these boomers, is being put out by the trading establishment, is being put out by these people that got these finance PhDs, is because people being involved in this activity is a threat to their existence. If you want to learn more about how to do what we were talking about earlier, how to stop stealing time away from your family, right? How to be able to create income on demand as an options trader, reach out to me about the highest paid part-time job in the world. Click the link below in the description. If you got any questions, hit me up in the comments. This is David W. Williams, also known as Diamond Dave, and I'll talk to you later.